And now we will learn why bank reconciliation is one of the most important security features in any software program, especially QuickBooks. Bank reconciliation is the main tool that auditors use to check the accuracy of your books and records in QuickBooks. The reconciliation discrepancy report is a great security feature because it will show if transactions have been changed after they have been matched or cleared the bank. We all know that the process of bank reconciliation is comparing every check and deposit in our bank account to every check and deposit on the bank statement. And if they match, we mark them as cleared. Usually, transactions at the end of the month did not have an opportunity to clear the bank. So QuickBooks Security requires that not only do we match them to the bank statement, but we specifically indicate in QuickBooks which transactions are cleared and which are not. And it's very important that QuickBooks remembers which checks and deposits have cleared and which have not. As of the date of the last bank reconciliation, you're not supposed to change anything before that. That's because anything before any transaction in a bank account or a credit card account before the date of the last reconciliation have been matched perfectly to the statement of the bank or the credit card. Why would you change it if it's matched to an independent source? Of course, if a transaction is recorded after the date of the bank reconciliation, you could change and edit it, no problem. That's one of the reasons why bank reconciliation is an important security feature as well as a feature that ensures accuracy. We assume that you know what bank reconciliation is. This video also assumes you know how to do a bank rec in QuickBooks. If every bank and every credit card transaction has been declared the same as in the statements, why would you change them? So this is what the reconciliation window looks like at the moment that you finish bank reconciliation. Notice all of the deposits have been matched to the bank statement and the check marks indicates that they're cleared. All of the checks have been matched to the statement and the check marks in the margin indicate that they have been cleared. At the moment you click Reconcile Now, you're sealing off all the transactions before the period in which you're reconciling. In this example, we're reconciling July 31st, 2016. That means when I click Reconcile Now, all of the checks and deposits before July 31st, 2016 have been matched to the bank and should not be changed. If they are changed, it will be inconsistent with the bank's records. Now, after we click Reconcile Now, of course QuickBooks asks us to run some reports, but we won't in this case. But what we will do is show you what the window will look like after we do bank reconciliation. We reopen the window by clicking Banking, Reconcile, and notice it says last reconciled on July 31, and the beginning balance of this new reconciliation is the same as the ending balance of the previous. Now that is the main point of this video. If anything affects this balance, if you change any transactions during the month of July, and therefore this balance changes, any change you make will show up on the reconciliation discrepancy report. Let's change check number 2 in the Chase Bank register from the $50 that it already is to the $300 that we're going to change it to now. Before we do that, let's open the Reconcile window, and you can see that the Chase Bank account has a beginning balance of $1,300, and the assumption is the next time we will reconcile is August 31, because the last time we reconciled was July 31. So this was the ending balance of July 31, and it should be the beginning balance of August, or August statement. But if we change something during July, this will change, and anything that changes this will show up in the reconciliation discrepancy report. I'm going to open the Chase Bank register, and the check dated July 17th is check number 2. We're going to change the money amount from $50 to $300. Push tab. Now when I click record, QuickBooks says, excuse me, this is not a good idea, because that check number 2 has already been matched to the Chase Bank statement as $50. So if you change it to $300, your records will not match the bank. Are you sure you want to do it? We click yes. It says, look, are you absolutely sure? Because I really think you're making a mistake. In this case, we know what we're doing, so we click yes. Now, notice, of course, the balance changed, but more importantly, when you go to reconcile, the beginning balance of Chase Bank changed. It was $1,300, but since we made a change before the last reconciliation date, the beginning balance now changes and does not match the bank statement. If you want to find out why, you can click Reports, Banking, Reconciliation Discrepancy Report. It's for Chase Bank, and we click OK. Now notice, the check that was dated July 17th was changed today, July 8th, at 12:26 p.m. I'm recording this video on July 8th of 2016 at 12:26 p.m. But the check that I changed was dated July 17th because it was for example purposes. Notice the reconciliation discrepancy report shows the original amount, and it shows the effect of the change. You have to logically figure out what the new money amount is. If the check decreased the bank account by $50 and the effect of the change decreased the bank account by another $250, that means that the check was changed to $300. Now you may notice it says the date and time of the change, but it does not, by default, show who changed it. The way to find out who changed it is to click the Customize Report button in the top left of the report. Make sure the Display tab is chosen in the Modify Report window, and then click the check mark in the margin of this choice, Last Modified By. Now when we click OK, QuickBooks adds a column to this report, and it shows who changed the July 17th check on July 8th by an amount of $250. Now I'm just going to go ahead and change it back, and once we change it back, you'll see that it will disappear from the reconciliation discrepancy report. It's the check on July 17th, changing it back to $50, click record. We get the first message, click yes. We get the second message, click yes. Here it is. Now when we go back to the reconciliation discrepancy report, there are no discrepancies. And now when we click Banking Reconcile for Chase Bank, the beginning balance of August now matches the ending balance of July, and now everything is okay. Students will often ask, why do we need the reconciliation discrepancy report if we have the closing date exception report and we have the audit trail? Well, you should know that the audit trail and the closing date exception report don't clearly show when a check has been uncleared or unmatched after the bank reconciliation has been done. It does show some kind of change, but it's not clear what the change is. Only the reconciliation discrepancy report shows very clearly when something has been marked as unmatched or uncleared. So how can a user unclear a check if they're not doing bank reconciliation? If you're not in the bank reconciliation, only the register window can unclear or clear a check. And that's the reason why permission to use the register window falls under the area of sensitive financial data when setting up permissions for users. If you remember a previous video, whenever a user tries to do something that they're not allowed to do, they get this warning. And the warning tells you what area of permission you need. So if the user is not able to open the register, this warning will open up and say, you need sensitive accounting permissions to perform this action. Talk to your administrator. Now, when the administrator grants you permissions, it will be in this window, window number 6 out of 9, when giving a user, for example, user Jill, access to the sensitive accounting activities, one of which is using the register. So if you remember the prior video about passwords and permissions, you saw this window, and this is the window in the series of windows that gives a user permission to open the register, and only the register can clear or unclear a check. Let's unclear check number 1 and see what happens. We open the Chase Bank register, click on check number 1, and in the column of the check mark, click on it. We get a warning that we're not supposed to do it, and we click yes anyway. Now, after the first click, the check becomes a star. A star means that the check has only been cleared in the reconciliation window, but not permanently cleared as part of the bank reconciliation process. In order to remove the star, we click on it again. Now that the check and the star have been completely removed, we click record, and we get another warning message. Are you sure? Yes. Are you absolutely, positively sure you want to mess up your records? In this case, yes. And here we go. Now this has been marked as uncleared. Now let's take a look at what check number 1 looks like in the Banking Reconciliation Discrepancy Report. For Chase Bank, we click OK, and it says type of change uncleared. It has all the other information, and just to remind you, if you want to know more than just the date and time it was uncleared, if you want to know who uncleared it, again, click Customize Report, click Last Modified By, then click OK, and you'll get the username of the person who uncleared it. Now let's compare this to what it looks like in the audit trail. Reports, Accountant and Taxes, Audit Trail. Now notice if we go down to check number 1, we can see that check number 1 has been changed many times. It was entered on June 28th, but then on July 8th, which is today in real life, the day that I'm actually recording this video, it was changed many times. And the reason it was changed many times is because I was practicing before I made the video. But look at the last 3 changes here in this audit trail. The last 3 changes, all I did was mark clear or unclear the check. And you'll notice there is no thick black bold line to indicate the change. So when I made the first change from 200 to 500, and when I made another change from 500 to 200, the thick black bold writing told us what the change was. But in the audit trail, if you do not see one change to the next with a thick black writing indicating the change, it's not exactly clear to the user what was changed. You might remember that if you see a change but you don't see anything in bold, that the change indicates the check was either cleared or uncleared in the register instead of the bank reconciliation window. But it's not as nice as seeing it in the reconciliation discrepancy report. That's also true for the closing date exception report, Accountant and Taxes, closing date exception report. By the way, if you didn't set a closing date, you won't see anything. Now look at check number 1 in the closing date exception report. Notice again, The last three changes don't show what was changed. It only indicates the date and time of the change, and of course you can add a column to show who changed it, which in this case it's already showing, but it doesn't show what was changed if the only change was clearing a check. That's why the best report in that case is the reconciliation discrepancy report. It can show you some things that the other two can't, and that's why doing bank reconciliation and looking at the discrepancy report is a very important part of QuickBooks Security.